Hello, everyone. It is me, Danielle Jane Mitchell, your up and coming queen of real estate, and I'm here for another episode of Tuesday Tip at 2. Hello, everybody. Hello, everyone. Happy New Year. It is me, Danielle Jane Mitchell, queen of real estate, social media extraordinaire, and I'm here for another today's and this week's and this year's New Year Tuesday Tip at 2. So as some of you may have noticed, I did take a bit of a hiatus, right? I took the last couple of Tuesdays off of the year just to recuperate, just to be sure that I'm bringing you some great content and all that good stuff. And yeah, that's what I did. Had some great family time. So I'm back with my big hair, back with a little color, back with some rested skin and voice. But most importantly, back with tips. Real estate tips, that is, to get you going and started in the new year of 2023. So, of course, let's talk about it. Let's talk about what is expected. What is the trend saying? What is the forecast saying for the housing market in 2023? That's what we're talking about today. And of course, I want to make sure that you have some in-depth understanding of what is expected in 2023. Make sure you're prepared. Make sure that you can make a conscious and well-informed decision for yourself, for your family in 2023 as it relates to buying and or selling. Now, before I dive into that, I have to say welcome all my new subscribers. Hey, y'all. I'm so happy that you have joined me for this 2022. And remember, I don't just upload Tuesday Tips at 2. I upload different things, content, stuff to make you laugh, right? Typically surrounding real estate. Some family things I throw in there as well, but all stuff that I think you'll like and that you would want to take a look at. Now, if you haven't already, I need you to hit the subscribe button. Make sure that you push all notifications. Push the all notifications button so you can get everything that I upload onto my YouTube page. And I need you to like, I need you to share, I need you to comment. As I always say, the algorithm be algorithming. Okay. It does what it wants to do. But you commenting helps push the algorithm to where it needs to be, as well as sharing and all that good stuff. And listen, this may be helpful for somebody that you know, that's a friend, that's family, who is looking to buy in this coming spring market. So don't withhold good and helpful information. Be sure to send to that family member, to that coworker, to that friend of yours who may need this information. All right, so let's just go ahead, dive on right into it. Now, let's talk about what has been already happening in the lane of real estate, in the vein and lane of real estate. What has been happening is 2021 was an amazing, crazy time, okay? Coming off the heels of quarantining, economic shutdown and shift. The Federal Reserve decided to do some things that will help stabilize the economy with the pandemic that had happened, right? So in 2021, we saw record low interest rates. They stayed low for quite some time until in 2022, they started to creep back up to even beyond where we were pre-pandemic, okay? Pre-pandemic, things were creeping up, but after, are we out of a pandemic? I don't know. That's a good question. There's that question. But we, since then, have gone up in our interest rates. Why? Why has that happened? Why has that happened? You ask. You may ask, why? Why has it happened? Well, it happens because, again, just as the Federal Reserve wanted to stabilize the economy by lowering interest rates, the whole purpose of raising the interest rates was to stabilize the economy, right? So what happened with that whole swing, that whole uptick of people buying houses, selling, it caused inflation, right? So in order to make it so that inflation doesn't go too out of control and make pretty much most homes, unaffordable the Federal Reserve, who determined the mortgage rates for the whole country, they started to have an uptick in mortgage rates, right? So that is what happens to help stabilize. And so what that manages to do is that it starts to weed out people who either get nervous, right, about buying because they see that interest rates are, climbing up. And maybe some who were motivated just to buy due to a better mortgage rate, or you have people who are basically priced out of certain homes, right? So that lessened the competition for a lot of areas, right? So those who could go to this price point maybe came down a bit, so on and so forth, trickle effect. Okay. Now, during this time last year, pretty much the second, third, and fourth quarter of the year, I heard some people talking about, and real estate professionals saying, hey, it's a buyer's market. Not quite. In 2022, it didn't quite turn into a buyer's market. It absolutely turned into a more evened out market, if you will. So again, we started to weed out the buyers. That competition that we had in 2021 lessened. Okay. Houses started to begin to stay on the market a bit longer. And that's pretty much what happened. So it started to be a more even, a more balanced market as opposed to a full on buyer's market. And my observation, what I find very, very interesting is that in certain areas now, I'm licensed in Pennsylvania and I service the Philadelphia and surrounding suburbs, mainly Montgomery County and Delaware County. And what I found is that even within those different counties, it was some differences there, right? So in Philly, the uptick of houses staying on the market was a lot longer than in the counties. And as far as getting the list price versus what the actual sell price of the property was, the percentages wasn't as drastic in the counties as it was in Philadelphia. I believe a large part of that for this local area is that the desire to live in the counties can a lot of times outweigh. And then, of course, Philadelphia, yes, there are $1 million properties in Philadelphia, but for the most part, there are the medium, the average home is maybe about 300,000, okay, in Philadelphia. But most people are buying within that 200, 250, up to $300,000 range in Philadelphia. Affordability is greater, of course, in the city. And so you'll see in that area a lot more people being priced out of different areas because of affordability versus in the county. Again, that's my just your neighborhood realtor observation, being on the front lines, seeing kind of the trends of what's going on in the area, in these local areas. And yeah. So the question is, how do we proceed forward in this climate? What is 2023 going to look like? Hey, at the end of the day, what's going to start happening now is, as I said earlier, interest rate in 2021 and part of 2022 were down. They went up, for the majority of 2022. But what's going to happen is interest rates are going to begin to go down again, right? Because spring market is coming. They want to push people to buy. Essentially, steam, we cooled off a bit, right? We lost a little bit of steam. They wanted to regulate things, make sure that we're not continuing to pay astronomical amounts of money, right, for houses and pricing people out from being able to afford housing. Okay. So we're going to see interest rate begin to, start to come down a bit. I don't know if they're going to be record breaking low. We'll see how that goes, but it's definitely going to fall more in alignment with what we're used to seeing. And when I say used to seeing, is really in the last maybe recent 10 or so years, right? Because we also have to remember, especially millennials, who are the group that is buying at this time the most. Many millennials are now buying houses. They're looking to buy in the next few years, short years. So whether that's now or in the next 5 years. And what you're seeing is that some of them are getting a little, leery and buying because they're like, oh my goodness, interest rates are 7%. But generations before recognized that, hey, this is nothing new. And that's still really a good interest rate. I think the main thing now is that we're still in a low inventory market. So even with interest rates going low or potentially dropping, not going low, but dropping and balancing out a bit more, there is still low inventory. And so at the end of the day, we need homes on the market. So even when interest rates drop, there's still going to be, again, an uptick in home prices and sales because it's not much inventory out there. And so we'll see how it goes. We'll see how it balances out. I know a lot of people kind of wanted to wait till the spring market to start buying and as well as selling. So we'll see how it goes. What's being predicted is that it's going to be about 14.1% lower home sales compared to 2022. Okay. As both buyer and sellers pull back from a housing market and economy transition. But what's for certain is that there are some groups that need to buy, right? Some people have to buy because they're moving for whatever the reason is. And there are those who have to sell. So at the end of the day, we are relying on those who simply, hey, I need to buy a house. This is what I want to do. And at the end of the day, even though sales in general might go down, at the end of the day, there will be certain groups who just simply need to buy, simply need to sell. Particular millennial generation, who are, a lot of them are first-time home buyers, and after a bit of a shaky last couple of years, they may feel more motivated to go ahead and buy. I think overall, let's not, call this necessarily a comeback or recovery mode, because again, demand is still way down from its peak, and the supply is still way down from its peak as well. So I wouldn't say, hey, this is a necessary bounce back or a more balanced out market, but definitely expect to see houses stay on the market longer. 30 days is normal. That speaks to a more balanced market when you see houses on the market for 30 days. Okay, so that's not a bad thing. That's a normal thing. That's a balanced thing. And what I would say, the other thing we have to keep in mind is this: if we look at the forecast, which I've talked about this before, when we're talking about trends and what things are looking like, if we look at 2019, we did, 5%. 2020, we did a huge jump to 15%. In dollar volume. In 2021, 25%. Okay, so when we're talking about the Federal Reserve needing to balance out the market, you see that jump right there? That jump is the indicator that, I think this market needs to be balanced out a bit more, right? Now, 2022 estimate is coming down 6%. But guess what? Coming down 6%, that's not terrible from a whole 25% markup, right? And if we come down even an extra 7%, what will equate to 13%, right? In the next 2 years, that's still not bad, right? And then it's forecasted in 2024 that we should see an uptick. Hopefully things will balance out even more next year, okay? Where we'll have more of a boom, okay? But at the end of the day, that's really balancing out, keeping us on trend to that incremental growth that we see and that is popular in real estate, as opposed to those big leaps, right? Jumps up. Okay. So as you move forward and making your decisions and buying properties, and whether it's for your primary residence, whether it's for an investment property, understand that in real estate, when you're playing the long game, you're going to be fine. If you plan to play the long game, if you're a person who's like, hey, I'm gonna get an investment property and I'm going to hold it for some time, or I'm going to get a residential, property and it's going to be my primary residence and I'm gonna keep it for at least 5 and 7 years, you're playing the longer game, so you're going to be all right. Okay. And at the end of the day, this is real estate. And it has its ups, it has its downs, but at the end of the day, incrementally, it is going to grow, it's going to appreciate, and that's what's important. So understanding the market as far as, it's going to have its little glitches in the matrix, if you will, but as long as you stay the course and understand what your goals are, whether they're short term and whether they're long term, you're going to be okay if you just weather what's happening. If you buy now but interest rates higher, when they drop, you can refinance. That's what's fantastic. We can't predict what's going to happen. We can look at the data, we can look at the numbers, we can make great guesstimations, but you have to do what you need to do for yourself in the moment and for your family. Okay? I hope that helps. Listen, if you have any more questions, comments, concerns, go to book.djmrealtyco.com and let's talk about it. Okay, let's talk about it. And you can schedule a buyer or seller consultation. If you're ready to buy now, if you're ready to sell now, if you're ready to buy or sell in March, in April, still use that link. Give me a call ASAP. Okay. Remember, there's no place like home. No place like home buying. And I can't wait to see you guys next week because I did miss doing this for all new Tuesday tip.